What's going on, family? This is your top-down analysis for June 21st through Friday, June 26th. And happy Father's Day to all the fathers out there. Let's get into it. What can we expect from the market this week? First and foremost, let's go to our Forex factory. Let's see what we got going on from an economic standpoint. Okay, so Sunday, of course, no red folders. Monday, no USD red folders. And it looks like we won't have any actual critical red news folders until Thursday, June 25th. We're talking about the GDP and Core PCE Price Index. Friday, again, no red folders. So in terms of volatility, this should be a rather straightforward week. Should perform as is, but we should see some more volume coming into the market on Thursday with the red folders. Now, let's talk about what we saw in the market last week. All right, so we started off Sunday a little bit above equilibrium, so we were slightly bullish. If y'all watched the previous TDA, I said that we were slightly bullish, but more or less ranging from a immediate support resistance standpoint, right? And then at Sunday open, we immediately gapped up, which we were expecting. Why? Because global news let us know that we were very close once again to the Iran U.S. peace talks, Strait of Hormuz opening up indefinitely, et cetera, et cetera. Y'all already know things have changed once again from just last Sunday. So we saw that huge spike up. Again, we were anticipating that. This is where we started to see that decline. Once we spiked up, we hit that New York high on Monday and then immediately started coming down. So this is the area that I had marked in the last TDA, that 4,300 to 08 on a pullback, 42.95. Why? Because that gap. Y'all already know if we don't close the gap on Sunday, it will be closed either that following day or sometime throughout the week. And we saw that on Wednesday. But it took a rather large economic event for that to happen. So this is where I gave the trade idea on the platform, on the community platform. Everybody should have saw it. Entry was on a pullback 42.95. That's if we came back right at that gap, or 4,300 to 08. Why? Because this is where we had the last major resistance turning into support. And y'all can see how many times price has come back down to tap this same area. So once in terms of a support resistance side, when we tap certain areas over and over and over again, those areas tend to become stronger. From a demand supply side, because those are institutional levels. Once those areas get tapped over and over again, I'd say more than 3-4 times, those areas become weaker. Why? Because the institutions have already picked up the orders, the stop losses, any retail trading, areas where orders have been placed along with central banks, etc. Those areas become weaker because those orders are already filled. So since this was a more or less resistance support area, it became stronger. We saw a bit of ranging before we popped up and hit our target 1 and target 2. So for those that did get in on the trade, congratulations. We saw a good bit of hippage there. I want to say we closed the week out with around about maybe a little less than, I want to say maybe 1,800 pips, 15 to 1,800 pips or so. Then Wednesday is when we saw all of this major drop. So what caused this drop? Going back again to the economic calendar, Wednesday is when, June 17th, that's when we saw all of the red folders, the FOMC, funds rate, economic projection statement, FOMC press conference. Also, this new, not press secretary, but the new federal funds individual, the Warsh, he is highly on the strengthening the dollar. So he favors a strong dollar. So a lot of anytime he speaks, you can almost expect that gold is going to become bearish. The dollar is going to strengthen more or less. The dollar is going to either strengthen slightly. Gold is going to pretty much melt. So with those economic projections coming out, we saw a break of structure here once we hit that target 2, and then again just a complete meltdown. Now once we hit this area, which was right around 43.20, we came back, hit that area, filled the gap, and we had another major break of structure right here at 42.75. This is the area between this zone 42.75 to 42.55. This is where I said, I want to say that was Thursday. If y'all want to get in on a sell, I'm seeing her sell at least to that right around that 4150 to 4100 area. First target was going to be 4170 to 4190, which was right at that mid-range, because we could see again those of that mid-range areas where we typically will see consolidation ranging. But because the momentum was so high, we continued further down. And as y'all can see, what I talked about in the previous TDA, we still have unfilled gaps at 4130 to 4110 and 4100 to 4080. So going into this week, I do see a continuation of that sell to fulfill those gaps, and quite possibly come all the way back down to hit sell side liquidity at 40, I'd say 4030 to 4020, possibly 4,000, which is last week's or the previous week's low. Okay, so this is where we left off. We are bearish, obviously, but let's go ahead and move on to marking up this week. All right, so coming into this week, we've got a strong level of resistance here, right? On the weekly time frame, we've got continued resistance here where the market has basically hit up against this area multiple times, and then from a demand area, we've got where the market has continued to try to find, our prices continue to find support right at that 4,000 level. So before we even get into marking up the high, the low, the this, the that, I'm marking off 4,000 as a major demand zone. That 4,000 level is going to be the pull or push for the bears versus the bulls. All right, because this is an area that, again, price or the buyers have continued to defend. So further downside from this area, or a huge displacement, bearish engulfing candle, etc., from this area, we're definitely headed further down. I'd say that next major area of resistance or support. All right, but we're going to let price action kind of play out from there. Let's look at what we do know. So 4,000 being major demand zone. Also, actually, let me go ahead and mark this up. Mark this high. This is the high of the week. This is my low. I'm going to say 43.90. And I'm going to make this black. And this is my low. Yeah, that's 42. We're going to leave that right there. And there we go. All right, so I got my high, my low. Dropping down to my daily. I want to get my mid-range. And because we are currently on a, more bearish than bullish from a major and minor perspective, I'm going from high to low because we are in a swing low. So that 50% level is right at 42.52. This is the area that I'm also going to have an alarm set for. Why? Because again, those mid-range areas are right where price typically will decide where it wants to go. All right, so this is my mid-range. I'm going to color this. Let's just say blue, dotted. Bam. Okay. Get rid of that. Now, from a 4-hour perspective, all right, so clearly we can see, again, we are bearish. From a 4-hour perspective, I'm also looking at this area. This is a major area of, you could say, resistance for me. Why? Because we had a major break of structure on the higher time frame here, right? So I'm marking this area off, which is right around 42. We'll just say 42.20 because I like those psychological numbers. Those psychological numbers are right where the market, again, either is going to pick up orders, we're going to reverse, either from a buyer sell perspective, we're going to reverse direction. Our price is going to make up its mind on what direction to take. So this area would be, I would say, my second level of resistance. So for me, this is and if I stretch it across 42.20, as y'all can see, we came down, she hit this area, this continued to be resistance, and then that Sunday is when we had that huge pop up. We had equal highs here, followed by a bearish engulfing, creating displacement, and then the continuation down. So this level is one that I'm going to do it on the 1 hour, but I'm going to definitely put a alarm here because I can see price coming to this area and then going further down, coming up to sell further down. So this would be my second level of resistance. My first level of resistance, I'd say, would be right around that 4,200 area. Why? Because it is a major, I'd say 4170, because that is another psychological area where we had a lot of resistance. Okay, so this would be my first level resistance, 4170. All right, so we've got our mid-range. We've got our two areas of major resistance. Again, if I stretch this right on across, it gives us that. Make sure I'm on the nose with it, and then let's drop on down to that 1 hour. All right, and from a 1 hour perspective, now whether the market gives us a gap up or down, again, we'll just have to see how price action plays out. I believe that we are likely going to get a gap down. We may get a quick pump to the top, but ultimately I do see her selling further down. Why? We already talked about things from an economic standpoint, but from a global fundamental standpoint, we still don't have a finalized deal. Okay, we've got more things happening. We've got US and Iran still waiting to meet in Switzerland. They were supposed to sign the deal last week. First I think it was Sunday, then they moved it to Wednesday. Just a whole lot of back and forth. So long story short, we still don't have a deal. That's putting more pressure on gold and strengthening the dollar, basically. But on the sell side, we have liquidity sitting here. Let me use my brush. We've got liquidity here. We've got liquidity here. So from a sell standpoint, these areas would be my targets: 40.50 to 40.20, and then finally 4,000. Those would be my longer targets. And then once we come down to this major demand level, that is going to be the deciding point to whether we continue further or we have a bounce up. Now, from a gap up standpoint, like I said, I already really talked about it, but from a gap up standpoint, I could see her gapping up to this area or climbing to this area right around 42.20, and then possibly this 42.50 area. Why? Because again, this is this mid-range where price decides whether we're going to continue further up or down. And with price action being the way that it is as of today, we are, primarily bearish. I can see her continuing on that note, on from that momentum from Friday on into at least this first 2-3 days out of the week. All right, so let's grab the fibs. And since we are currently on a bearish tape where I'm going to do my swing low, starting high, going lower, right? And that lines up. That lines up right with my fib. So I'm going to do my thing from the 15 minutes. So I'm going to set an alert at my mid-range because I want to see how price reacts here. Now, I'm not going to just blindly take a trade. I want to see how price is reacting. So I'm going to set my alert here. I'm also going to set an alert at my 30% area, which is that second level, 42.20. So these are just further confluences of where price is likely going and where we're headed going into the first few days of the week. Now, like y'all know, this can absolutely change on a dime. Last week I was bullish. Y'all can, y'all can see I had a swing. I even had a swing target marked up at 44.25. However, once this economic news came out on Wednesday, that changed the entire game. So we had continued lower highs, lower lows, break of structures, lower highs, lower lows. It just continued melting down. And remember, we still have these fair value gaps at the bottom. All right. Now, also worth noting, we have, let me go back to the one I was going to. We do have fair value gaps at the top. Okay, so wait a minute. Just so we're all clear, I'm gonna go ahead and mark this FEG out here. And for those that not really sure about fair value gaps, we're looking at the first and the third candle. That's how I draw my gap. So I'm looking at this candle here, the first and the third candle. This middle candle is the candle that creates the displacement or the momentum gap between the first and the third candle. That is that bullish engulfing candle that you see in the middle. Okay, so we have fair value. Yeah, we have that imbalance right in here. Price tapped it because if I stretch it all the way out, you can see price tapped it, but we haven't fully cleared there. And we have those sell side liquidity just sitting here at the bottom. Also, from an hourly standpoint, we have fair value gaps at the top. Okay, so again, here, first and third is what I'm looking at. And then also right here, this is a smaller one. But these, again, are areas where you can go through, you can look for those fair value gaps on the higher time frame because those tend to react the strongest. And because the market does not like inefficiencies, it does not like imbalances, we will go back into those areas to fill those gaps. Okay, so these have not been filled. So eventually, from a technical standpoint, we will come back to fill these gaps. However, before we even get here, we've got to clear out this liquidity down at the bottom. And then, like I said, that 4,000 level is going to be the deciding level to whether we go further down or we create a bounce and continue further up. All right. So I'm going to put my fibs once more here so y'all can see it. these are the levels that I'm looking at. Should we gap up? Let's go back. These are the levels that I'm looking at. Should we gap up? I'm always looking at my 50%, my 38. From a higher perspective, my 61. But these two levels are the areas I'm looking at for a quick bounce to the top. And then I'd be looking at a sell, a continuation further down, just because of the from an economic, standpoint and fundamental, as well as technicals. It's just the bears are ruling it for these first few days. The bears are ruling it. We'll see where we are come Wednesday, Thursday. Y'all remember Wednesday and Thursday is typically our reversal days. So keep that in mind. And then Friday, we'll just see. Friday is usually the market wants to rebalance itself. So that's your top-down analysis. I hope this was helpful. Y'all share with me in the chat what you all are looking at for this week. And I'll see you at the beaches and the banks.